I've been trading for over 15 years and I have been working with traders for the last 8 years, and a lot of traders like to use candlesticks. However, there's a lot of misinformation going around, and in this video I've prepared the 3 most important trading tips, tricks, and you may call it secrets because they're not well known if you want to master candlestick trading. So let's get into it. The first and most important rule is considering context, and candlesticks on their own don't work. I know it's a bold statement, but a candlestick is just representing such a small piece of information that we cannot rely on it by itself. However, if you put it into the right context, it can tell you a lot. So for example, we are seeing a pin bar, right? And most people believe that a pin bar is a rejection, which is absolutely false. And people should go short when they see a pin bar, right? However, what else is going on? We can see the market is in an uptrend. We can also see that we have lately a very big push. We have been breaking out of this flag pattern, and we have made a continuation. We have pushed really high here on the last 2 bullish candles. So clearly we are in an uptrend. We have been breaking out of this range. And once we go to the lower time frame, this is the 1 hour where we see the pin bar. This is the 5-minute time frame at the same timestamp as we see the pin bar. We can see that the trend structure is always holding up. The market is making higher highs, it's breaking through resistance, it's testing resistance as support, and it keeps doing that. Resistance is turning into support, resistance is turning into support. So there's no sign whatsoever that we have even a slightest bit of bearish information. Nothing on this chart suggests that there is anything bearish going on. It's a bullish market, it's very strong. However, you could say that we are currently stuck in a consolidation phase. I give you that. So we are not really fully bullish, but we are more bullish than bearish. And we could come up with a trading plan. The trading plan would suggest we wait for a breakout. If the market breaks out above the highs, if it continues what it has been doing in the past, we are continuing our bullish momentum, we are continuing our bullish idea. If the market violates the trend structure and breaks to the downside, then the pin bar on the higher time frame may have been triggered. Still, we would be trading the pin bar bearish in an overall very bullish market, so that's not ideal and it's a low probability setup. However, it would make more sense than to just blindly jump on the pin bar. However, I would still lean on the bullish side. And following up, you can see what happens. The market put in this wedge, or you could say it's a flat top triangle. The highs are coming up. We have a build up, we have a breakout build up here, and eventually the market pushed higher. And if we resume back to the higher time frame, this is the pin bar that we've seen. And a pin bar is never a signal to jump short. We have to put it into the right context. And that is where a lot of traders go wrong. Always analyze candlesticks in the bigger context, look at the lower time frames, and I will show you a few tips later on how to really understand the candlestick microstructure. So let's continue. Point number 2 is the X-ray view. And again, we're starting our analysis on the higher time frame. Here we are on the 4 hour, as we can see here in the top left. So we have a pin bar, but what do we have in this case? We have a deceleration. What does deceleration mean? It means that the candlesticks are getting smaller and overall the momentum is losing its power. And you can see that very nicely, that the candles are getting smaller and smaller until we reach our pin bar. And this is a very different picture than what we've seen in the beginning here. Here we have the pin bar, but in the context of a huge breakout on the bullish side. Here we have our pin bar in a deceleration mode, which is very different. However, it's still not enough to go short. Let's jump to the lower time frame. And here we are now on the 5-minute. This is the pin bar that we're seeing on the higher time frame. And what do we see now? On the lower time frame, the pin bar is in this case an exhaustion pattern. What is an exhaustion pattern? We can see that the market put in a bunch of resistance highs here. It made a top. However, this is a V-top. The market immediately sold off, so this is not sustainable. It's an exhaustion pattern. It shows the last attempt of the bulls to go higher. Probably, you can see when we jump back to the higher time frame, a lot of people have been long, maybe a lot of profit taking has going on. So there's this V-top exhaustion pattern. And the most important part is what happens after the top. And you can see that the market is back to previous highs. And if, and that's a big if the market sells off, gets below the trend line, this would confirm a lower high. And not only just a regular lower high, But look at the distance between this high and this high. It's a significant distance, and this means that the market was not even able to come close to what we have seen here. Those highs were unattainable, were not reachable anymore. So this means that there's not a lot of buying going on. There's a lot of selling interest, probably also a lot of profit taking from the buying orders. And so we have fewer and fewer buyers, we have more and more sellers. And we can analyze even this pin bar. What is this pin bar doing here? So let's focus on this pin bar, and we go from the 5-minute to the 1-minute time frame. And this is the 5-minute pin bar, and it's showing us another V-top rejection pattern. We have higher highs, we have lower highs, and look at, again, the distance between the highs. Significantly lower highs. This is a very, very key piece of information. It's a breakout buildup. The market comes back to the previous flip zone, resistance turning into support, and this time the market is not even able to come close to where it traded before. Whereas when we were previously at the level, there was a huge rush of buying interest. This time the market is rallying or selling off into the level very strongly, and it's not able to get away at all. So you can see this pin bar here on the 5-minute is showing us very, very similar information on a microstructure. And that's what we are calling fractal nature of the markets. It doesn't matter which time frame you're looking at, whether it's the 4-hour, whether it's the 1 hour, the daily, the weekly, the 1 minute. The patterns are repeating themselves, and the information that you get is the same, just on a different time scale. So that is a very important piece of information. And now when we look ahead, you can see this is back to our 5-minute. This is where we analyzed the first head and shoulder after the higher time frame pin bar. You can see afterwards when the trend line was broken, we had a retest and then we sold off. So in this example, with the context of the deceleration, with the breakout of the higher time frame structure, with the breakout below the trend line, it's a very, very different picture than the context where we analyzed the pin bar in example 1, where the pin bar happened in a huge, very, very bullish uptrending market. Here the pin bar happened in a weak uptrending market, and a lot of deceleration is going on. So context and microstructure are the first 2 points. What's point number 3? With tip number 3, I would recommend to use candlesticks as a top-down signal and start your analysis on the higher time frame and look for important candlesticks, and then use that information then on the lower time frame for trade timing. So we're starting, for example, here on a monthly chart, which is very high. However, even if you are a day trader, you can use that information. So what do we have here? We have a very bullish candle. We can see this is an engulfing candle. The engulfing candle is breaking out of the previous range, but there's something else going on besides the breakout. To the downside, we had a fake out. So the market is in an uptrend. It's made a wave 1, wave 2, wave 3. Then we were stuck in a consolidation. Wave 3s are often leading into reversals, and this is what this fake out showed. There's probably a lot of sell traders who jumped on this breakout. However, where do sell traders have their stop loss? Somewhere in the range. As the market trapped those traders, a lot of liquidation was going on and the market shot up higher. So this is a great piece of information. We have the fake out and we have the breakout. And we are in the right trend context. We are in an overall uptrend, so we want to look for more buying opportunities. Now let's look at the lower time frame, and what do we see? This is the monthly candle on the 1 hour chart. What do we see? We have our fake out here, the market selling off and jumping back into the range, trading higher, retesting the highs, and then being stuck here above the range, which is good. As long as we're staying here above it, what I would recommend, go to the lower time frame. You can even use this information on the 1 hour and then look for more bullishness. So the higher time frame really sets the stage. The higher time frame tells you, do you want to be long going forward? Do you want to be short? Or is on the higher time frame nothing worthwhile and we're going to sit out on this market until something worthwhile happens again? That's how I would recommend it. And you can see afterwards, the market stayed in this consolidation for a while, but broke out eventually and continued trading higher. And we got that information from the monthly chart. The monthly chart told us we want to look for buying opportunities. On the lower time frame, we didn't just have to wait for some type of trigger, for some type of pattern. Here, for example, we could have used this flag pattern or this triangle, whatever you want to call it. and then on the breakout you would be trading in line with the higher time frame. So very important 3 tips. I hope you got something helpful out of it. Let me know in the comments below if you enjoyed those types of videos, and I will make more of those.